Hello, I'm David Cassidy with the market summary for the week ending Friday, the 22nd of January. Now, as you can see from the accompanying table, US equity markets welcome Joe Biden as the new president with a strong week. In addition to optimism that Joe Biden will be able to get his proposed $1.9 trillion fiscal stimulus package through Congress, and signs that the coronavirus outbreak may be starting to come under control as virus cases and hospitalizations have started to decline, there was plenty of other great news coming out of America. For example, US economic data was extremely encouraging. Not only did the weekly US initial jobless claims fall to 900,000 and continuing claims to 5.05 million, but the previous week's data was also revised lower. Now, this is good news as it indicates that the US employment market isn't weakening as last week's data initially suggested. US housing data and the Philadelphia Fed Business Outlook survey completely smashed expectations, with housing starts rising 5.8% to 1.67 million, its highest level since September 2006, while the Philly Fed, as it's more commonly known, jumped to 26.5 from last month's reading of 9.1, its highest reading since last February. Additionally, Friday's, the 22nd of January, US Purchasing Managers Index, PMI, comfortably exceeded expectations and showed improvements from last month, with readings of 59.1 for manufacturing and 57.5 for services. Remember, 50 is the line separating expansion and contraction. So not only do these readings show that the US economy continues to expand, but more importantly, its expansion is accelerating. And to top it off, the US company earnings season continues to exceed expectations. Although it's still early days, as only 68 of the 500 constituents in the S&P 500 have reported, a staggering 57 of those have beaten expectations. Unfortunately, it's been a very different story in Europe and the UK. UK manufacturing PMI fell from 57.5 to 52.9. Although it's still expanding, the expansion is slowing, while services, unsurprisingly, fell to 40.6 from 50.4 due to stricter lockdown restrictions. Eurozone manufacturing PMI fell to 54.7 and services fell to 45, again due to lockdown restrictions. While these readings are disappointing, the obvious recovery stimulus is the vaccine rollout, as this will enable the current lockdown restrictions to be eased and allow the service sector to fully reopen. Looking ahead to this coming week, the main events are the Fed monetary policy meeting on Wednesday and the weekly US jobless claims data the following day. Other US data includes durable goods orders and personal consumption expenditures, which is the Fed's preferred inflation measure. While here in the UK, we have employment data, the unemployment rate and average weekly earnings.